Hi, everybody, and welcome to the weekly market wrap for September 29th, 2017. I actually just wanted to start the wrap off real quick with a company we took off the focus list called Regency. They're the media, well, actually, the movie company. And this company was not too long ago trading up in the $20 range. It had a huge dip all the way down to about 14 bucks. And almost right near the bottom, the insider stepped in and bought shares of the company with his own money. Now, this is just simply catching a falling knife. Now, I know we're doing it on the back of an insider trade, so it gives us a higher probability of success. So what happened was we wound up putting it on the focus list. I think it was around 14 bucks or so, and we took it off up at $16 today. So we had about it was probably a little higher than 14, excuse me, but we actually had about an 8.7% gain within a couple of weeks. So my target was a little bit higher, but I'm starting to see some weakness on the company. We're making lower lows and lower highs in the last few days. So one of the things that I wanted to do was just make sure that we lock in this type of situation because it is catching a falling knife. And what happens when you try and do kind of a cute move like this is that if you hang on too long, the probability of success starts to go against you. So it's not that you can't do these things, but you don't want to stick with them forever, especially when you see a stock almost get cut in half or at least down by a third and then starting to show signs of weakness. So I wanted to lock it in about 9% gain in a couple of weeks, not bad. Um, just kind of wanted to go over that one. Secondly, the S&P 500 or the ETF, SPY ETF that I always show here, new highs once again, all-time highs, end of the quarter today, and there's just not much to say. It's the same story every single week. The stocks go higher, may drop down 1 or 2 days during the week because there's some North Korea fear or some other issue. The only thing that I saw maybe pop up a little bit moving forward here was the actual Federal Reserve Janet Yellen replacement possibility. So I think the market wants Gary Cohn to replace Janet Yellen, and I think that would be something that the market would enjoy. Except Gary Cohn and President Trump may not be on the best of terms. So with that being said, there may be somebody else, and President Trump said that he was going to make his mind up in the next 2 to 3 weeks. So that would be really interesting to see if he comes out of left field with a surprise that the market doesn't like, and we get a sell-off based upon that. But that's just pure opinion on my end. There's no reason to sell stocks because of that. It's just something that I saw pop up today as the White House put out a trial balloon on the new Federal Reserve chairman, and just kind of see how the market reacts to that. So that would be interesting in the next couple of weeks. Secondly, there's nothing to do here. Just keep on owning shares, keep on following what insiders are doing. Take some profits in special situations like the Regency that I was talking to you about earlier, and we just keep on plugging away. So not much to talk about. We have banks doing well. We have the overall market doing well, and we'll just continue to plug along. So hope you guys have a great weekend, and thanks for tuning in.